What exactly is SoftBank doing right now, and why do it now?
Sure. So they're essentially reducing their exposure to this $2.2 billion of bonds that they bought from WeWork. They agreed to provide the financing in late 2019. You remember it was shortly after the IPO of WeWork at the time had failed. The company was in need for cash. SoftBank stepped in, and this was part of their support package for the company. Now, they are essentially selling a quarter of that to institutional investors. It allows them to sort of differentiate the investor base for the company, but also to pocket, something around $450 million of cash that they can then use for some of their other companies or however they see fit.
What's the pitch here? How's it being received?
It's interesting. It's still early days. They announced it this morning. It won't close until Thursday, so we'll see how investors react. WeWork debt of comparable seniority and maturity trades at a yield of around 10%, and so that's what they're going for with this as well. It is a risky proposition. High yield bonds on average yield about 4.5%, and even those with CCC ratings, which is what the WeWork debt is rated, yield around 7.2%. So it's still obviously a riskier proposition than most. But the big question will be what the future for this company and frankly for just working would look like. And so that's the big question that they need to answer.
Given that they're still unprofitable, given that Omicron is still hurting their business, right? So what's the future hold for WeWork now? Right.
So they've laid out a plan to become profitable next year and free cash flow positive the year after. In terms of how the composition of their office spaces will look like, they're trying to shift away from single-use individuals and more into enterprise, and try to sign longer leases and have the money that comes in matching the long-term leases that they have with the properties going out. So that's the strategy. It remains to be seen, if that will work out.